everyone, and welcome back to your Member of the Month Spotlight. I'm your host, Erica Neal. I'm your authorized infinite banking practitioner, real estate investor, and today we are here with Joe Rinderknecht. And yes, I've practiced saying that name. I hope I hit it on the nail because I was like, I'm going to do this right. But I've known Joe for a few years now, and I'm so excited to have him on because he is doing fascinating things in the world of real estate investing. Joe, thank you so much for being on today.
No, thanks for having us, Erica. I sure appreciate it and appreciate the services that you and David provide. So,
Oh, of course. And like I mentioned, I've enjoyed getting to know you. We met, it's been what, 2 years now. But when we originally spoke and you were talking about your investment model and what you do for your clients, and we'll kind of dive into that in a minute.
yeah,
I'm excited to, communicate that to other people because you've got a really good business model. You've been able to find some good deals in the thick of kind of the struggling time that we've been in and really pull through for your investors and give them a unique experience that we're not seeing in the real estate world a whole lot right now. So we'll dive into that. So, little teaser before we get into all of that. Joe, tell us about you. Where are you originally from? Where are you now? And how did you get to that place?
yeah. So, quick background. Was born in eastern Idaho, little town called Rexburg, Idaho. Some of you may know it. Um, I really I'm actually still back here in the Rexburg area. I've bounced back and forth between Utah and Idaho pretty much my whole life. My grandpa has a cattle ranch down in northern Utah, where I've pretty much spent the other half of my life. So anybody that is watching this, I've got, a cowboy hat on because that's, I came from ranching and training horses and all that fun stuff and
It's not
decided
just for looks.
no, no. When we met at the best ever conference, it was funny. I had some handful of people there be like, "Are you all hat and no cattle?" And my response to that right now is usually, "I don't have any cattle right now, but I can rope and ride with the best of them." You know, so
He's the real
um,
deal.
we do got a couple horses, but I don't own any cows at the moment. I prefer real estate at the moment. Um, but so grew up doing uh, ranching, and then my dad is also a general contractor. So going through high school, I went and trimmed out houses, trimmed out spec houses with him, and I've done framing and concrete and pretty much everything from pouring a slab to the final touches of trimming it out. So and I'm grateful for that experience. I probably wasn't at the time when I was going through high school,
Oh,
and
I'm sure.
there was times where, because like my dad worked two jobs. He worked on the pro desk at Home Depot, and then he would trim. And this was like my sophomore year. Like I'd go to a spec house, and we would work until I don't know 3 or 4 o'clock in the morning.
Oh my gosh.
And I remember one time we got home as the sun was rising. He went showered, got in the truck, and headed to Home Depot. And I slept a couple hours before school, and yeah, that happened a lot. But
Oh my gosh.
it taught me a good skill, with construction. And as we get into this, like as most of your listeners who are in this world of real estate, when you're buying value add deals, like construction is one of the biggest variables that if you don't understand it, you don't know how to control it, it'll kill you.
Yeah.
It'll kill the deal.
Yep.
And so I'm grateful for that experience. And, just ranching and construction is not easy work. And, you learn good traits, your word is your bond, and you work hard, and you do what it takes, to make sure that, the animals are fed. Or in real estate, you do what it takes to make sure that the deals get done the way that you said that they're going to get done.
Yeah,
So
that effort and the work ethic, right? Just in addition to the trade of knowing how to frame and pour concrete. I mean, wow, that's incredible. I didn't even realize that. Oh,
yeah, it's really served me especially on these last couple deals. Um, and then I think the only other thing is I started really getting into multifamily and bought my first deal in 2016, which was a house hack, right? We bought a duplex, lived in the basement and rented out the upstairs and practically lived for free. Um, And during that time from 2015 to 2018, I actually drove semi full time as well for my father-in-law. Um, so for any of you who think that you can't do this while you have a full-time job, I'm about to debunk that for you because I was I was driving semi full time for my father-in-law. Like there was a summer where I was going to California and back, and I was only home like 3 weeks of the entire summer and cumulatively, right?
Mm.
But while I was driving semi full time, I was going to college full time as well, getting a degree in finance. So I got a bachelor's in finance, minor in entrepreneurship, real estate, and then had like a 6 month kid at home, in 2017. So like the worst time to get
Yeah.
into real estate, based on where we were at financially, with the time that we had. But usually those times of pressure are the best times to do it. Um,
That's how diamonds are made, right? Under pressure.
that's right. That's right. Yeah. Diamond in the works.
Mm.
So yeah, between that time period of 2016 to 2018, I bought the duplex, fourplex. I bought a fourplex and then also bought, or we fixed and flipped a handful of other duplexes as well in that time. After 2018, I realized that I wanted to get into the big multifamily because the smaller multifamily just like it's fun for a minute. But I wanted to, like, I've always had my eyes set on doing like the large apartment complexes,
Yeah.
50, 100, 200 plus unit stuff. And I remember, sitting in the semi one day telling my partner I bought the fourplex with, I was like, and this was probably 2017, early 18. I was like, I will buy big apartment complexes one day. Because I had a belief then if like somebody has done it, something that I want to do, like I can do it too, you
Oh,
know?
absolutely.
And so just, you never think a kid sitting in a semi and lots of people doubted that I would because I was a kid sitting in the semi, right? Um,
Yep.
and I've never done anything outside of labor ever in my life, right? It's all been labor work.
Yeah.
And I wasn't good at math in high school. And kind of fast forward to now, like from 2019 to 21, I went and worked for a couple of people that we know, but I went and got a job as a property manager managing a Section 42 low income
Okay.
housing project. So I was really able to cut my teeth on that deal. What I'll say about that is I didn't know that there was drugs and cockroaches in Utah until I went to that property.
And you found all of them in one place.
Found them all in one place. A fun story. I love to tell this story because
Oh my
it,
gosh.
it it kind of boggles people's mind. Is like I got good enough at what I do there. We ended up doing a sting operation on our maintenance guy because he was doing meth and dealing meth out of our maintenance room.
Oh my gosh. That's hardcore.
So for any of you having drug problems, just go partner up with your local strike force. Not many people know that there is even a strike force, but just go to your police department, ask them about the strike force, and they will help you crack down on drugs. It's awesome.
So from construction worker to semi driver to house hacker to sting operator into commercial real estate syndicator. Oh my
Exactly.
gosh.
That
That's,
pretty
oh
much
my gosh.
sums it up.
Yeah. Well, I guess before we move into, because I want to make sure we get into your projects and everything you have going on now. Uh, you mentioned something, right? For those of you there, we have a variety of different people that listen. There's people who've been doing this for a long time. There's people who are looking for a place to put their money, but then there's other people that are really looking to learn. And so, wherever you are, if we're talking specifically to the people that are looking at getting into real estate in whatever, that's a big world, but in whatever direction of real estate you're wanting to go, there's a transition from being in your W-2 to doing real estate full time. That's difficult. That's really, really hard for people. And a lot of, like you said, a lot of people think they can't do it, but it's all about mindset and whether or not you're willing to work as hard as you say that you want that next chapter. But what would be any pieces of advice, or what would you do differently if you were to go back while you're doing your W-2 and trying to transition into real estate full time? What did you learn? Any tips, tricks, and anything that you would do differently during that time?
Yeah. I don't know that I would necessarily do anything differently looking back. What I would just say is like, even if like you have a W-2 or you've got a house full of kids and whatever your situation may be, it's like if you want to go do this, like no better time than the present, right? It's what's the saying? It's day one or one day, right? Like
Yeah.
in sales, we always say, right? Like if somebody says, "Oh, timing sucks. We'll do it in 6 months." Like, cool. Like, well, what's going to happen in 6 months that's going to make you push it another 6 months? You
Yep.
know,
Oh
it's
yeah.
just it's an objection that you're making to yourself. So don't listen to that. And I think the biggest thing that I did was I I kind of had that long term vision of what I wanted to do in real estate. And so I feel pretty grateful because you see people that bounce, like a lot of people's stories I got in multifamily, they're like, I did single family and then I did land and then I did multifamily and then, they bounce back around asset classes. Like I've been pretty grateful because like I've really only ever done multifamily since I got started into it. And so I was able to focus really quickly and be very intentional about
Yeah.
what I was going for. The one thing I did do early on that I would say is like find a mentor that you can add value to. When
Love
I was
that.
going to college, um, I was a part of an entrepreneurship club, and there was they called him like the resident mentor there, and he was a fix and flipper. And so I went and bird dogged for him, finding deals. And this was probably, late 15. Um, I never got paid on a deal, but I learned a lot.
Yeah.
And then I wanted to get even deeper into the real estate, and they were just starting to come out with a real estate minor there.
Okay.
So I started the real estate club up at Utah State University in Logan with one of the professors who owned a bunch of deals in Texas.
Okay.
So it's like
Yeah.
I kind of manufactured for myself the ability to learn real estate. Yeah,
One other thing that you mentioned on a little flag that went off for me was when you found a mentor at your college. You said you started to go do bird dogging for him and you didn't get paid, but obviously, what you were paid was not monetary. You learned a lot and all of that. And I
yeah,
think that's so valuable that you went into when you went to find a mentor, you did not go with the give me, right? Like the recipient mentality. You're like, what can I do for you? What can I do that you need that I can also like get value, right? So there's
yeah,
reciprocity there. And one of the big things is people who have, the money and the experience and all that, they just need the deal. And so you went and found that deal. And so if you're going to look for a mentor, this is not a, hey, please help me. This is a, hey, what can I do? What value can I bring? It doesn't have to be money, knowledge. Sometimes it's just boots on the ground and elbow grease and just getting in there and working. So
yeah,
bringing that to your mentor obviously paid huge dividends down the line, even if you didn't get paid up front.
yeah. Well, and I want to expand on that because I think like most of my like even in high school, like if I wanted to go learn something, I went and found the guy doing it. So say when I was in high school, I really wanted to learn like I knew how to train colts. Colts are like, the 1, 2 year old baby horses that, turn into professionals, right? But I wanted to go learn how to do like reining cutting horses. And so there was a guy local to me. And so like I went out and, mucked stalls to and then got on horses that wanted to kill me to learn the how to do the cutting and reining, right? And I think a lot of this came from the mindset my grandpa gave me because he would always he taught me at a young age, like you take a young horse that knows nothing, that wants, most of the time they're just at fight or flight, they want to kill you. If you get on them, they'll buck you off. If you take that horse and you teach him how to jump a ditch, if you teach him how to rope a calf, if you teach him how to neck rein, he becomes valuable every time he learns a new skill,
Mm-hmm.
right?
Mm-hmm.
And
Those
so
are
then
high value horses, the highest of
yep,
cutting horses. Oh my gosh. Yeah.
yep, yep. So you see that horse that, as a 10-year-old maybe, at 1 years old, he wanted to kill you. At 10 years old, he's, the reigning cutting horse champion or
Yeah.
whatever, and is worth $1 million.
Yeah.
And I think that's a good journey for all of us to look at is, that's a 10-year spread. Like say on that horse is a 10-year spread. Sometimes it takes 10 years, sometimes it might take 3 or 4, but you got to have that long-term vision.
Yeah.
And like you said, be willing to go and find somebody, a mentor or a job, even get an internship where you're not going to get paid anything, but you'll learn a skill like that property management job I was telling you about. I only got paid 24 grand a year, and that was in 19. Like the deals that I'm doing now, and I'm getting paid for those things now and
Yeah.
in
They're
the
coming
near
back.
future, you know.
Absolutely.
So oh, you know what? I haven't ever mentioned this on a podcast or a webinar
Ooh,
before.
we've got the exclusive right here on Member of
Yeah,
the Month.
I actually got I actually got shivers thinking about it because I got to give all the credit to my wife
Yeah.
too.
Yeah. Yes.
I don't know why I've never mentioned this, but like I would not be here if it wasn't for her. Because we got married in 2013, and she has supported me through all the times where I made nothing.
Yes.
That's like we've been married what 12 years almost, and like I still haven't made it yet. And so like I'll be honest, like she is still supporting our family to this day, because like once the real estate pops, like I will retire her.
Yeah. Oh, that's beautiful. And
So
that's so true. It's who you choose to have in your life as a spouse or a partner. There's a book called Millionaire Next Door. I don't know if you've ever read it.
yeah,
I think any kid in high school, college, or young adult should read that because they specifically reference who you marry will determine your future success. Bottom line, not because they're successful or not, but whether or not you can succeed is dependent on who you marry. So that's all. You want to give her a shout out? What's your wife's name? Remind me.
yeah, it's Bailey. Yeah.
Bailey, you're doing great.
For anybody who needs fractional CFO services, she's a badass.
Oh, it sounds like it. Yeah. Oh my gosh. That's amazing. But yeah, I mean it's who you have in your life. Um and it's the work you're willing to put in and what you're willing to sow today so that you can reap later, right? There was something I heard, I was listening to a little snippet, and I don't remember the quote exactly, so I'm going to butcher it, but he said the price to success is sucking at something and being bad at it and being embarrassed, and you know what I mean? Because when you first, and you're like, for example, talk about your colt, and anytime you're training them, they don't know what they're doing. And if you've ever watched any, horse that's trying to learn something new, it's like all legs everywhere, right? Like they're not super coordinated, they're learning. And same thing with even when we're kids, when we're learning how to ride a bike, when we're learning how to walk, it's awkward, it's weird, but you don't feel good and you're not doing it very well. But if you ever just stopped doing something because you weren't good at it, you wouldn't be where you are. You wouldn't even be sitting upright. So just be okay with being bad. Be okay with it and be ready to slowly over 10, 15, 20 years get better and better and better until one day you look up and like you said, you've made it, which I don't know if anybody has ever been like, "Oh, I made it," but let's move into your deals. I know you've got some good stuff going on. So let's start broad and then we'll get in narrow. So tell us your high level investment focus. So what are you focused on as far as the asset, and what are you focused on as far as your market? What are you looking for when you're going into a deal?
Yep. So right now, let's see, where should I start on this? I've got essentially two different things that I'm doing right now. So I have a fund of funds, right? And see, I started that back in 22. The fund of funds, what we've been doing on that is just, we will raise capital and put it into others' deals. So right now we've invested in a couple larger multifamily deals and a couple custom home builds. But the fund of funds side, we're raising money and going and doing deals that we're being asset agnostic and looking for stuff that is more cash flow heavy,
Okay.
or kind of more of like a growth fund, cash flow growth fund, if you will. Um, Seems like there's a pretty good appetite from investors right now to do, like more of that pref equity style where they're getting 10 to 20% returns or greater in 12 to 24 months. And so that's why we did like some of these custom home builds, because it's like 25% in 18 months, you
Nice.
know. And so I've got guys who don't need any depreciation. They're like, I actually need capital gain because I got so much depreciation. And like,
Yep.
cool, let's. So
Which
we were,
I want to touch on that real quick. So for people who are, if you're getting into real estate, when you invest in these big deals, then you get a lot of depreciation from investing in large multifamily deals, or, I know David does like RV resorts and things like that. When you invest in those deals, you get large chunks of depreciation. However, unless you are a real estate professional where you do real estate full time, you cannot offset your W-2 income or, regular ordinary income with that depreciation. You can only
yeah,
offset real estate income. So for these people that have high income jobs, but they're investing in real estate, they have depreciation laying around and they need other real estate gains so that they can use that depreciation somewhere. So just
yeah,
to kind of touch on that, if you have a high income job and you're looking for a way to increase your income without increasing your tax liability, real estate's a great way to do that.
yep, agreed. So yeah, and then just with this fund, the other thing I'll mention is like there's a lot of, like, when you think of taxes, there's a lot of different like asset classes that you can invest in that can give you more depreciation. Like David, right?
Mhm.
David White, I've talked to him a couple times. He's doing a lot of mobile home parks right now, right? Because you still get cash flow, but you also get almost dollar for dollar in depreciation.
Yeah.
And that's great for you know, whatever anybody needs as far as their tax planning. And we're looking at some oil and gas and data centers because I want to be very resourceful for my investors and not just give them one bucket of like, here's a multifamily deal, here's the depreciation, cash
Yeah.
flow appreciation. Like, I want to start to offer other things with other sponsors, because like I'm not going to go do an oil and gas, but can I raise 500K for a couple $1 million raise? Sure.
Yeah.
You know,
And give
so
your investors the ability to invest in that type of asset class with a professional.
yep, and diversify because not everybody's going to fit in my multifamily bucket, and some might even be pregnant in multifamily, meaning they just got a lot of holdings in multifamily, right?
I've
Uh,
never heard that terminology.
really?
I've never heard that, but I get it. That one's new for me. Okay.
So, um, yeah, the fund of fund stuff I really love because it's passive for me. I just got to raise the money, do weekly or monthly newsletters, and it's passive, and I love that.
Yeah.
Um,
What's the name of your fund?
Upgrade Partners Capital, or UPC Fund for short. So if anybody want to check it out, you just look at upcfund.com. Um, and my partner and I have some deals on there that we've done. And as far as multifamily goes, we probably won't raise any more money through the fund for multifamily because we want to put all of the money that our investors want to put in multifamily into our own acquisitions.
Fair enough. Yeah. You've got your target there.
Yep.
Um, the people, so obviously when you're taking your investors' money and putting it into another person's deal, you are going to somebody who specializes in that asset class, be it custom homes, oil and gas, whatever.
Yeah.
Which is great, right? Because you can't be the specialist in everything, but you can start to get to know specialists in that area. What is your process of identifying, and just real quick, like process of identifying who you want to invest with, what type of operators are you looking for, and how do you vet that?
Yeah. So what we've done, like the deals, like the multifamily deals, these guys have a couple billion in assets under management.
Mm,
They've never done capital calls. They've never paused distributions. Like even to today,
wow.
the first deal we did with Rise 48 was our very first deal. They're based out of
Yeah,
Phoenix.
I know them.
Um, so they've like we did a deal with them in Bedford, Texas in 23, May of 23, and they haven't paused any distributions and it's still humming along, even though they're kind of getting kicked in the teeth a little bit with softening rents, but it's still going well.
Nice.
And not like other groups right now that are losing 100% of their equity. Yeah.
Yep.
So we invest with people who have like a very proven track record that have been doing it for a long time. Um, and the way that we kind of vet, so I'm part of another group called Avestor. Are you familiar with them?
I don't think so. I've not heard of them.
So Avestor is a fund administrator, um, but they're way more than a fund administration group. So like they helped us set up our customizable fund where we can raise capital like a fund, but we can deploy it like a syndication. So our investors have ultimate flexibility to self-diversify their own portfolio. So
Wow.
if I had a say multifamily, oil and gas, and custom home, they could say, I want to put 50, 50, 50, or 150 in one and nothing in the other two, So you got to really know what your investors want, and go find those things that your investors want or need, right?
Yeah, that's super unique. I've not heard of that.
It gives me more flexibility too. It doesn't tie me to just one asset.
Yeah.
I got a blind pool fund, if you'd have to have a thesis saying, okay, I invest in multifamily, 1980s vintage in the Sunbelt states, right? It's got to be very cut and dry because investors on a blind pool fund are investing in that thesis,
Right.
right? So if you go and buy a storage complex, it can't fit in that bucket.
Yeah. You didn't
But for
check the
me,
boxes.
yeah, for me, like with my customizable fund, I can go buy a landscaping company in my fund
Mm,
if I wanted to, right? It's
yeah.
like just use the same fund docs. We just have like a set up like an individual like SPV for each different deal that we do, but we don't have to pay $20,000 each time for a new set of docs.
Yeah.
Like
Oh my
you do a
gosh.
syndication.
That's really unique. I've not heard of them. I'm sure other people with a fund are like, their bells are going off right now. That's fantastic.
Yeah. Part of the vetting process is I work like if I decide I want to do a deal, I'll get together with a couple other individuals who want to raise on it too, and we'll vet it together,
Yeah.
right? And the benefit there too is that like most of these sponsors, they have their different waterfall structures. So like if as a fund, like say I may only be able to bring 500,000, say I've got 10, $50,000 checks. I bring 500K, but cumulatively we bring 2 million instead of just the 50K investor getting the 7 pref 70/30 split. As a group, we get the 9 pref 90/10
Yeah.
split.
You're going to get that
And
higher class.
and now that 50K investor gets an 8 pref 80/20
Yeah.
split, right? So strength in numbers. And I don't have to do the entire, like I said, the entire vetting process. We can, spread that load out. But Avestor's been amazing for that, bringing a lot of resources to make it easy. So,
Awesome. Sounds like it. All right. So let's get into your syndication. Remind me the name. It's the
Cowboy Capital.
Cowboy Capital. I was like, I knew there was some alliteration there. I just couldn't put my finger on it. So Cowboy Capital. I know you guys have some really good projects going on. What's been going on? And this is the multifamily syndication group. What have you guys got going on? Anything? Well, before we get into any specific projects, what are you focused on in the multifamily space?
Yep. So yeah, at Cowboy Capital, like I've got a partner named Levi Allen who I work with on that. He's done a lot of stuff on the Western Front as well. He's got about 600 units. Known him for about 5 years, and he comes off actually from a ranching farming background as well. So
Okay.
Cowboy Capital, right? Um, So what we focus on is buying apartment complexes all along the Western Front. We're specifically focused on Montana, Idaho, and Utah, which are, kind of interesting markets that not a lot of people are looking at right now.
Yeah.
Even investor, even groups that live in these states, they're all doing stuff in Texas and Oklahoma and Ohio and yada yada yada. But we live here in like Rexburg, Idaho, and we pretty much we bought a deal in Missoula, Montana last September. We're buying a deal in Boise right now. We are a 4 hour drive from both of those deals, right? And where we both have about a decade of experience, we just decided, you know what, we can be extremely competitive in our own backyard, against other sponsors, even bigger ones
Mm-hmm.
that may be coming out of state, because we've kind of got that backyard. Uh, what do you call it? The unfair advantage, I
Yeah, like
guess.
the home field advantage, basically. Yeah.
Yeah. So we really are laying heavy on that and underwriting and looking at a lot of deals here locally. We're looking, as small as 20 units, 30 units, up to
Mm.
100, 200 unit deals. Um, and we want to buy stuff that's like 1980s, probably more 1990s vintage and newer. And our bread and butter right now is like that 50 unit, that 50 unit range, give or take, 20, 30 units.
Yeah.
We haven't got into the big 100, 200 stuff yet, just because like that's a whole different world. And, we're looking at a deal up in Nampa right now. It's 252 units. They want 60 million for it. It's just like 1% earnest money on 60 million is a check we can't quite cut yet.
Yeah. That's a big pill you got to be ready to swallow. That's, yeah.
So we are really able to compete on these smaller mid-sized deals. We're under contract on a 48 unit in Boise right now, 91 vintage. And my partner Levi has been very, very good he's more like the deal sourcing, the broker, the underwriting arm of our team. And so the broker from there is like, hey, I think out of everybody looking at this, I think you guys would be the best fit to buy it,
Yeah.
and so we were able to easily get into the best and final on it with one other person out of Oregon. And
Very nice.
yeah, we're able to take it down. Well, we haven't taken it down quite yet. Closing is June 7th, so
Coming up
uh,
soon.
it's coming soon. Yep. So that's really where we focus, right in our backyard. Mid-sized is really our bread and butter. We're really good at what we do as far as turning an asset around. Where I have more of the property management construction, so the asset management. So the biggest thing with that is like Levi and I like really, really complement each other's strengths,
Yeah.
and weaknesses. There's multiple calls that we'll get on where we'll get on with, a family office or a big investor. And, Levi be like, man, I'm glad that you were on that call. And we'll get on with like a broker or a lender. And I'll be like, man, I'm glad that you were on that call. Like I would have choked,
Yep.
you know?
Once again, it's who you work with that makes a huge difference. I love it.
Yeah. And I've gone through a lot of partners, and, Levi is one of the best that I've had. And I've definitely had some like early on really, really good partners. But like for somebody who I want to build kind of a small empire with, Levi's a good one for that.
So what are you guys, you've got this one in Boise that you're working on.
Yeah.
Any particular project or, deal that you're just super excited about? Anything that you're working on that you're just like, I want to shout this from the mountaintops.
Yeah. Yeah, I'd say the first one that we did together has been super exciting that we've done together. It's 54 units built in '02 or sorry, 98. I got a little bit of deal merge. It's built in 98 up in Missoula, Montana. We bought that September 30th this last year, and bought it from the original builder.
Oh, wow.
Yep. Yeah. That's the reason it's such a cool story is just because of like what we've been able to do to it in just what is that? That is, yeah, 7. So seven, just over 7 months, roughly. When we bought it, the average rents were 785, and there's more two beds. So there's studio one and two. So there's, what is it, 14 studios, 16 ones, and 24 twos. Did I do that math right? Yeah, 30, 24 twos. There we go. That's 54. So like for average rents to be 785 with majority twos, like there were rents in, the high fives, low sixes. And
Wow.
we ended up, but I'll tell a quick story about it because like people would be like, how did you even make that work? Because when people, it's interesting to me, like when people go to buy a deal, they're like so hell bent on like cap rate, cap rate, cap rate, cap rate, right? We bought this for a 2.8 cap, which people would lose their minds over,
Yeah.
right? But the thing is I have like notifications on LoopNet, Crexy, whatnot, and I got this notification on, it was like a Thursday night, 7 o'clock, that this deal came on the market. And Levi and I, for about 4 years, have been trying to get deals up in Missoula. There was a 101 unit deal that we tried buying that ended up trading for 30 million. So like 300K a door, right? So like
Wow.
the other thing as far as like home field advantage, right, is knowing your markets and knowing what things trade for, right? And Levi's very good at that as well. And so when this deal came across, I'm like, okay, they wanted 6.6 million for a 54 unit. I'm like, quick math, like you can do that very quickly. That's like 124, 25 a unit. And I'm like, holy crap. So I called Levi immediately and was like, dude, we need to look at this. It's newer. You know, we gotta, so like I jumped on it right away and emailed the broker and said, hey, we're really interested in this. Can you send me Renroll T12 within, and he sent it very quickly. And we
Oh,
got
good.
on a call with him it was like 10 a.m. the next day, and he had already had over a dozen inquiries about it. So we knew that it was hot because like we knew the rents were, pretty high in that area too. And so within 12 hours, like we had submitted an offer on it.
Wow.
So like actually I shouldn't say by 12 hours, but like by noon that day, we were the first to offer, and people think we're crazy, right? We put in $50,000 non-refundable earnest money day one, to get this deal. And so we were the first to bid it or to offer on it, first to tour it. I was actually heading to Montana that weekend, luckily. And so I just took a 4 hour detour from where I was actually
A
going.
4 hour detour.
Yeah, it was
That's a whole
literally,
separate trip. That's not a detour.
it turned into a detour.
Oh, yeah. Oh, my gosh.
But it was so much fun because like I was with my wife and kids, and we went up and checked out some old mines and old ghost towns and
Oh,
whatnot
cool.
while we were in the area. So it was fun. Anyways, fast forward to the deal. The reason we're so excited about that is when we bought it, 90% of those units were month to month. And so Levi, on a past deal that he did, he just ripped a band-aid off and did like a $600 rent increase across the board on a deal that he bought last March in Salt Lake. We did a $385 rent increase across the board, on all, 54 or whatever, like 50 units, with ones that still have leases. And in our business plan, we were fully expecting 50 to 60% of the tenants to leave,
Oh, absolutely. Yeah.
right? Like mass exodus,
Hmm.
stuff. 60% renewed.
Wow.
Yeah. And so the crazy thing is like, so $385 increase plus a, call it an average of a $70 utility charge back, right? Flat fee. So effectively a, for
450.
55 increase across the board, and 60% of the tenants renewed. Um, which we were like, holy crap. Okay, so that's indicator one that rents can be pushed. And so what we did, we were able to strategically do this where, so that went into effect like December 1st, that new rent increase.
Yeah.
Um,
Which is
by
unique because there's not a lot of properties that have that many month to month tenants. So that played in your favor, actually.
Yeah. You got to find these do-it-yourself landlords that have owned these properties for 10 to 20 years.
Yeah.
That's also part of our bread and butter.
Yeah.
That's same as a
Everything
voice.
written down on a yellow pad and yep.
Rent started on December 1st, and then we spaced it out to, because like the leasing season in Montana, like March, April, May, June, right? March is really where it starts. So we staggered, we did like 3 month, 4 month, 5 month, 6 month, because we've been able to, on when those leases expire, we've been able to bump them $50 to $75 again,
Okay.
and still are retaining a good amount of those tenants. Yes, we have a few notice to vacates, but we're still getting another $50 to $75 bump, and we're still below market. Now, the crazy thing here is, let's talk about the renovated units. We were able to get pretty much all of them vacated about the same time. Luckily, we had our property management team. They went and did like all the demo. We tore out all the cabinets. So we're doing like a full renovation, right? Cabinets, flooring, paint, fixtures.
What percentage occupancy were you at when you were doing like the mass construction?
Like 60.
Okay.
Yeah. Yeah. And we had raised extra like money and whatnot for that.
Yeah, you built that into your business plan. Yeah.
Yeah.
I guess that makes
Yeah.
sense because you said you thought 50 to 60 were going to leave, so only 40% left. So, yeah.
Yeah.
All right, go ahead.
Well,
Sorry.
what was crazy though was like come January, our gross rents on 60% was dang near the same gross rents as it was 100% occupied when we bought it.
Right, yeah, with the previous low rents. Oh my gosh.
So that's helped us tremendously, right? Um, so with all the units kind of vacating at the same time, we were able, like if people are doing mass amount of renovation, like this is how I would do it every single time, is I would do demo to all 100% of those units. And then I'd go in and, do flooring, and then I do paint, and then I do cabinets, right? And so we were able to do that. And, we're done with our renovations,
Nice.
right? We start, pretty much January, and to be able to bust out, 22, 23 units, in, 3.5 months roughly, and we're just cleaning them up right now. I think there's only 2 or 3 left that are, just getting the renovation clean done to be ready.
Yeah, good make ready.
So the reason we're excited about that is, like, I'll give an example of one unit. We just rented the renovated 2 bed at $1,550, and then an $85 utility fee, which is $1,635 on one of these units. The previous rent was $895.
Oh my gosh.
So was that an $800 increase?
That's insane. And you haven't even had this thing a year.
No, no. And we're sitting right now, like we're already looking at, and this is the wild thing, right? Is we raised most of it in pref equity, but we had planned on holding it for like doing a 2-year refinance, 5-year sell, and we expected that 5-year sell on like a 6 cap to be 11 and a quarter. And brokers are already telling us that we can get that 11 to 12 million right now.
Wow.
And so we're looking at both options right now. So once we get above like 85% occupied, I think right now we're sitting at, I got my rent roll spreadsheet right here. I can tell you we're sitting at 85% actually occupied right now. So once we get above 90%, then we'll probably list it.
Yeah.
And the other thing too is we can build 50 more units on the property,
Ooh, very nice.
which is another huge value add. So if any of your listeners out there want to,
You want to buy a deal in Montana, you better get on Joe's email list right now. It's coming.
right. Well, and the other thing too is, like, we only renovated 23, 24 of the 54 units. And so
Yeah.
somebody can go and renovate the other 30 units for, our average cost is about 12,000 a unit.
Okay, not bad.
Yeah. Well, we were able to, because both Levi and I have a lot of like construction relationships out of Salt Lake. So and Missoula is super expensive. Like their labor is crazy high.
Mm.
Our original budget was 20,000 a unit, but we did it for 12 because we brought painting, flooring, and cabinets out of Salt Lake
Okay.
with our relationships of who we've done renovations with before. So these guys would like live in our apartments for a week, week and a half, installing all this stuff, and just get it done at once.
Yeah.
That's how we were able to move so quickly on it. So yeah, there's a lot of upside for a new buyer. Another $300-400 bump from market to renovated rent
And you've
plus.
already proven that with what you've done, right? Like it's not something that is speculative. So,
Yep.
all right,
Yep.
y'all better get on that Cowboy Capital mailing list because
There you go. There you
you've
go.
only got 5% left to go on your occupancy, and then you can, or you can hold it.
Yeah, we're looking at both options for sure. We're getting debt quotes right now from some agency lenders, and because if we refinance it, then we can just hold it for the next 5 or 7 years and build the extra units, and it'll cash flow like crazy. And
Yeah.
so the benefit is that we've got lots of options, right? We refinance and get our investors' money back, and we just go for the next couple of years, or we sell and we walk away with a check bigger than I've ever had in my hand.
Hey, that's super exciting. Oh my gosh. Well, yeah, we'll have to stay tuned for that and do like an update because that's really exciting. That's a fantastic deal.
Yeah.
Uh,
So won't
so
happen
who?
till after September 30th because we don't want short-term capital
Yeah,
gains.
that's true. Yeah, that's true.
October 1st comes, let's go.
Oh my gosh, short term. Yeah. So if you were to say, who is your ideal client? Who are you looking for right now? Who is it that you can bring the most value to? Are you looking for a deal you want to buy from another sponsor? Are you looking for more investors? Both? Like who can we bring into your network to continue to help build what you're building?
Yeah. As far as on the acquisition side, like we've got plenty deal flow right now. There's a lot of deals not trading out there, and the prices are going down or they have a loan maturity. And so like some of these bigger deals, they're coming up on a loan maturity. And so I'd say the biggest thing we're looking for is like investors that want to, I guess, play ball with us on a bigger level. Like this Boise deal I mentioned, the like our average check size is over 400,000, which is new for us. It's amazing because it's not the 50K, 100K checks.
Yep.
On Missoula, I think our average was 200,000 because we had one investor who put 800K in from one of my last deals, a couple $400,000 checks on that one. But on Boise, we only have, I think, one or two investors at 100, and everybody else is over 400.
Wow.
And we're even getting our first family office check, which is super exciting.
Oh my gosh. So repeat
Yeah,
investors and family offices.
yeah. So
You're
we have
doing something right.
yeah, we only have 8 investors on Boise, and half of them are repeat, half of them are new.
Wow. That's so, oh man. Yeah, that's a new phase or a new chapter of any syndication group when you're able to raise money from people that you already have that relationship with, right? They're not doing all the tire kicking and which, everybody, if you're looking to invest with somebody, do all the due diligence you need. But once you
Yeah,
develop that relationship, it's so much easier.
yeah.
Do you have for people who are repeat investors, are there certain characteristics of people that you feel like you have that good relationship with that, obviously they want to invest with you again? Any characteristics or
As far as characteristics, I mean, trust is a big one, right?
yeah.
We've built a lot of trust with them over the years. And these guys, are high income W-2 guys, or, one of my big investors is a CFO at a bank. And, he trades a lot of his smaller stuff and that's why there's been bigger checks. He's been trading his small stuff into bigger. and he's just looking to get out of the active, investing as well too. He just wants more of the passive. And so like even the family office that jumped in with us, it's an older gentleman who's just looking to essentially hitch his wagon to a young and an up and coming young sponsor group that do what they say and say what they do, right? Um, and I think the biggest thing with who we're looking for and with those guys is we want to grow together. And so, like, as we start looking at more of these deals, like, we're willing to give so much more to our investors,
Mm.
you know, if they come in with a large check. And it's like, because we're looking at a couple of these deals, these big deals with a couple bigger investors where it's like, hey, you bring 90% of the check. So say on that $60 million deal in Nampa that we're looking at, it's a $25 million raise. They bring 90% and we'll give them, an 8-pref 90-10 split.
Yeah.
And
Mhm.
so we're really looking for investors that want to go long and go far with us. And because we're gonna really stay in our lane as far as working on stuff here in the Mountain West, and really build a large business here. And so those who want to get, because we've given like our return investors or even the family office, we gave, preferential, treatment. I think it's all about like a long-term vision. We want these guys to invest with us long-term,
Yeah.
want them to get some solid wins under their belt with us. And so we're not taking near as much as, we could, on the fees and whatnot. And we just want them to win because if they win, they'll invest more with us.
Absolutely.
Because if we sell this deal in Missoula for what we think we will, we'll get 2 million back from the original investors plus, the profit. It's maybe another 500K to a million, or I mean, it's a double, right? So a
Because you
million,
bought it for what was the purchase price on that one?
6.8.
6.8, and you're able to sell it within a year or eight, let's say 18 months on the long side. You bought it for 6 and you're going to sell it for 11.5 to 12.
Yeah,
Not too bad.
that's pretty awesome. I'd say mainly who we're looking for are, individuals that, either they have a W-2 job, they just need to focus on their own thing and they need to put their money with somebody that can be trusted.
Hmm.
Or, a lot of the investors too are retirees that are just like, I just need my money to work for me.
Yeah.
I don't want the duplex, fourplex, tenplex that I got to deal with a property manager myself anymore.
Yeah.
You know, um, I'm trying to think of who else we've got. We're accommodating our first 1031 on Boise too.
Yeah. Very nice.
So that's a new lane of bringing money in that it's tough, but
Yeah. I've got a good 1031 guy if you need it. But it's a big project. Yeah. Like you said, that's a whole new chapter.
yeah, but we're willing to do it. I mean, he's bringing what 435, so. And he's a first investor on this deal. He's a referral from a past investor.
Oh,
So
very nice.
we
Yeah.
love referrals. I would say even on the new investors, everybody that's new were referrals.
Oh man, that's relationships, and I think that comes from there's that book, The Go Giver, right? Like you're
Yeah,
able to give and give, and you're willing to. Hey, we're gonna give you this pref equity. Hey, we're gonna give you a higher share, a higher percentage share of the deal. You guys are building that trust and that relationship with your investors, and it shows. I mean, you're getting
yeah,
repeat investors, family offices, and now 1031 referrals. Like, who knew that was a thing? Like,
yeah,
that's
yeah,
fantastic. Oh my gosh.
yeah,
Um, well, I love it. And thanks for sharing. I think, with the funds, with the UPC fund and then Cowboy Capital, two different areas that serve a couple different purposes, but
yeah.
exciting things on both ends, man.
Yes, yeah. It's awesome. We're looking forward to the next 12 months.
Yeah. Shoot, the
But
next 6 months. Yeah. But anyway, so it's great. Um, let's wrap up. What would
yep,
you say, you've had a unique experience. The last several years of commercial real estate has been pretty difficult for a lot of people.
yeah,
But you you've been able to really kind of navigate that and find a good niche, find good people and grow in these difficult times, right? Um, what would you say over the last few years, any new beliefs, behaviors, or habits that you've adopted that you feel like have benefited you or, contributed to your success?
Yeah, a couple different things. I had a deal that kind of went wonky in Utah, and the biggest thing that kind of made that deal not. I will say it went bad. It was a tough deal, right? Bought in
Mhm.
21, sold in
Yeah.
24. Interest rates went through the roof. It was a 1951 build. We did about 100,000 a unit renovation. So just in those two things right there, right? Debt and construction,
Yep.
right? Those two things can kill any deal. And, we were able to give investors 100% return of capital on that deal. So we still feel like we won. Um, but I guess a new belief is just like making sure that when you get your debt, that you're still, very conservative on, are you pushing it out? When are you doing your refinance? Are you doing 2 years to 5 years? Making sure, like, because I mean, the bridge debt, right? The variable rate
Yeah.
stuff is what killed everybody. And,
Yeah. A lot of people got
um,
caught.
if you can get that fixed for a couple of years, 3 years to 5 years, most of what we're doing right now is like on Boise. Um, I think our lender has given us like a 6.75 fixed, 3 years IO. You know, um, we don't have to do anything with that, and it's from a credit union. Um,
Oh, okay.
so credit unions are really good right now, can be really competitive. We don't really want to do a lot of agency until we refinance. But like debt is a big one, right? You got to make sure that you don't put yourself in a bad spot with debt, even though you can maybe get better proceeds. And then construction is the other variable that if you can better control that. So that's kind of like where I come in and like our relationships in Salt Lake, and being able to really like, I think more than ever, I've really realized that relationships are everything,
Oh my gosh. Yes.
and so if you can build that loyalty with, contractors or subs and, they'll throw you a bone, you know, give you a better deal because they know that they're gonna jump in on the next couple deals with you. Relationships are everything, and that's huge and can help with everything, right? Raising money, finding deals, construction, like everything that we do revolves around relationships. So if you go into it with that go-giver mindset, right, instead of what can you do for me,
Yep.
I think you'll win. And partners are the number. I'd say, there's that whole thought process of you got, the if you're thinking, another horse analogy, you got the jockey, the horse, and the arena, right? The jockey is like Levi and I. The horse is the Boise deal. The arena is maybe the demographic or Boise itself, right? Like
Yep.
the deal could be amazing. The area could be booming like crazy. But if Levi and I are not the right guys, it doesn't freaking matter.
Yeah.
You could have the worst deal in Chicago, but if you have the right team, I mean, you're going to win,
Absolutely.
right? So you got to
Absolutely.
bet on that jockey and make sure, like I guess this goes to, I guess for investors as well as others looking for partners, like you got to vet them, talk to people who've done deals with them. It's relationships, right?
Absolutely. I think
So
that's so consistent across every, I do a lot of these interviews and I think that comes up in almost every single one is not, who, not how, just people, people, people. So absolutely. So let's wrap up. Any specific books or podcasts or anything that you are like, oh, you've got to read or listen to this. I'm a huge audiobook nerd, so I'm always looking for recommendations.
yeah. Um, the one that I've got into a new community called Fundraise Capital with an individual named Ryan Miller. He's based out of Calgary, and he's got like three different nine-figure funds.
Oh, wow.
Uh, and he does everything from like med tech to real estate to hedge funds. He's got a podcast called Making Billions.
Billions.
Yep. That's a really good podcast. He's got everybody he interviews in there has, greater than 50 to 100 million in AUM, so legit guys talking about, hedge funds, real estate, private equity, venture capital across the board, right? So that's a great podcast to really help. Like if somebody needs some inspiration of like, how do I even get to where I want to go? Like that's a good podcast because they talk about kind of the same thing, the journey and a lot of like what they're doing right now. And then let's see, other books. I mean, Rich Dad Poor Dad, right? Was the first book, of course.
I love it though, and it's just, it speaks to so many different people on different levels, but it's so consistent.
Yeah. I'd say the biggest book that's really helping me right now, I'm in a book club with one of my mentors called Atomic Habits.
Oh yeah.
That's the one I'm studying right now. And let's see, I'll grab this book right here because it's a different one than most people would probably see, but it's called The Power of Your Subconscious Mind by Joseph
Ooh.
Murphy. I like to dig into that one as much as I can. Last book that I'll mention, you'll probably laugh at it, but is the Bible. You should get in the
Yeah.
Bible. Right now, I don't know. There's a series that came out, The House of David, on Prime,
Yes.
and I watched that, and I'm like, I got to study that now because that is
Is
it's
that series over? Because I saw it. Did they complete the entire series?
yeah.
Because I refuse to start any more series that are not completed. I won't do it. I saw it and I haven't even looked into it because I'm like, I am not starting anything else that's not done. So if that one's done, I'm going to take a look at
It's amazing, yeah, and I know that they have a second one already set up,
it.
so definitely recommend that.
Your faith
Yeah,
can be shaken in the entrepreneurial space for sure. So
yeah,
it,
yeah.
you
That
know,
there's a lot of lessons
well,
with
there's a
that.
lot of lessons and there's a lot of guidelines too. Like I'm doing my own study. My goal this year is to read the entire Bible, but as I'm going through each individual book, I want to give myself context. So before I start each book, I'm looking at who wrote it, during what time period, who are they addressing, what's the context of, the social environment, the political environment, like what is going on during the writing of this book, and obviously making it applicable to, what's being written. But anyway, in both Exodus and because I'm still in the New Testament, in both Exodus and Leviticus, it is pretty clear what's written out, what you should do, and the best way to, behave in business, the best way to, if you're, so for example, in Exodus, they talk about if your bull gets out and hurts somebody, this is what needs to be done. Or if you're taking care of your neighbor's, cattle and something happens to their cattle, this is how you should, basically make up for it. And so it just kind of talks about like the right way to handle people, the right way to handle business. So I think it's just really good to kind of remind ourselves that even if it's out of our control, there's a right way and a wrong way to deal with it. Awesome, Joe. Well, thank you so much for your insight and going through. Like I said, I know you've got a lot of good projects going on. So I appreciate you sharing all of that. And what is the best way for people to contact you?
Yeah, I'm on the socials, probably Instagram and LinkedIn be the best ones, or my email, joe@upcfund.com. Here pretty soon, I'll have joe at cowboycapital.com. It's just not set up yet, but Joe at UPC Fund is my central. So,
Perfect. So Instagram, LinkedIn, or email. I'll put all of the links in the email as I send this out. I'll include it in the caption as well. So make sure you reach out to Joe and I mean, even if you're just there to listen and see what he has coming up in the pipeline, or if you want to buy that Montana deal, you got to wait till September, but you better be ready to pounce. So
we could start now. I mean,
start your due diligence. Why not? Yeah.
yeah.
Oh, all right. Well, Joe, again, thank you so much for coming on. And everyone else, please make sure you reach out, continue to subscribe and share so that we can connect as many people as possible, continue to build business and build wealth. We'll see you next month.
Thanks, Erica.
Bye, y'all.